Hello friends, I am CA.SONALIJINDAL. So it's our second lecture to the series of economic concepts with PYQs. In this video, we will try to find out the difference between capital receipt and revenue receipt by taking the real life example of normal human life. Then we will apply this to government budgeting. Finally, we will understand various types of deficits. In the end, we will see UPSC PYQs based on this. You can download video slides from the description and my Telegram channel. You will also get the notes on types of deficits, so you don't need to make notes, rather focus on understanding it. Firstly, we need to see the difference between capital and revenue. Capital is something that is non-recurring in nature. Revenue is something that is recurring in nature. In simple terms, it is जो हर साल खर्चा ना हो. Let's understand with the example of Mr. A. If he invests in car, what it is? Capital or revenue? क्या वो हर साल लेगा? No. So this is capital expenditure. But if he gets salary, he receive it only once? No. He will get it on monthly or annually basis. So this is revenue receipt. So expenditure जब पैसा जाए, receipt is something जब पैसा आए. So if Mr. A gets loan from bank, पैसा आया, it means it's a receipt. हर बार नहीं आएगा, so it's a capital receipt. He has to pay interest on it, that on annually basis. So it will be a revenue expenditure. At the end of tenure, he will pay back what it is. Capital expenditure. Let's take example of a factory XYZ. If it invests in land and building, such type of expenditure will be done once, so it's a capital expenditure, as it will be used for more than 1 year. It is non-recurring in nature. Suppose it hires around 100 workers. It has to pay wages on it. It will be given on monthly or annually basis. So it's a revenue expenditure. Similar factory if it invests in machinery. What it is? Capital expenditure. Taking a loan from bank. पैसा आया और हर बार नहीं आएगा. So capital receipt. What other difference is there between loan and machinery? In future, he will have to repay. So, there is future obligation. So, what it is? Liability. Machinery, factory will use it to produce goods or services. In future, it can be sold. So, it's an asset. Now, Mr. A will make a budget of his house. He will get salary, rupees 1 lakh monthly. He will get shagun from relatives around 20,000. Another thing, he will get interest on deposits around 50,000. What's his total revenue? 1,70,000. But he will have to pay school fees of his kids around 5,000 per month. Ration expenses around 25,000 per month. Other expenses of household around 50,000. So what's his total expenses? 80,000. So Mr. A will be able to save around 90,000. If Mr. A has only receipt of rupees 70,000, but his expenditure comes out to be 90,000, then difference of 20,000 will be called as deficit in his budget. For this, he may take loan from bank or friends. This loan is also known as borrowing. This is called as deficit financing. Similarly, government prepares its receipt and expenditure in advance to make plans. These receipts are divided further into revenue receipt or capital receipt. Expenditure is also being divided into capital expenditure or revenue expenditure. So, government prepares its revenue receipts in account 1 revenue expenditure in account 2. Capital receipts in account 3 and capital expenditure under account 4. So the difference between account 1 and 2 is known to be revenue deficit, and difference between account 3 and account 4 is known to be capital deficit. If we further take the revenue receipts in detail, these receipts are further divided into two. One is tax revenue receipts. Example, direct tax or indirect tax. And other one is non-tax revenue receipts. For example, fees, fines received from citizens, user charges, if any, interest received on investments. Revenue expenditure of the government includes salary payments to staff, any repair or maintenance charges, interest paid on loan. One important thing that is included in expenditure is grants given to states. These are given on regular basis. That's why these are included in the revenue expenditure. So, if revenue expenditure is higher than the revenue receipts, this difference is known as revenue deficit. But certain part of the expenditure includes the grant given to state. If this is used by the state in production of capital assets, example, village roads, certainly this is not a revenue expenditure, rather it is a capital expenditure. So this needs to be reduced to reach to the effective revenue deficit. So if we reduce grants given to states used for production of capital assets from the revenue deficit, we reach to the effective revenue deficit. Let's do fiscal deficit from the document. Firstly, we need to see capital receipts. These are non-recurring in nature. These include disinvestment, that is sale by the government of its shareholding. For example, recently Air India. Next, sale of asset by the government. Example, Spectrum, coal blocks, recovery of the past loan. And the fourth one is market borrowings by the government, borrowing from the banks, financial institutions by issuing government bonds. What it is? This is liability of the government that needs to be repaid in future. Next, account 4 shows capital expenditure that includes repayment of loan given to the state or UTs expenditure on the creation of assets and infrastructure. This is creating capital assets. Now, if we take total expenditure, that means total revenue expenditure and capital expenditure, reducing revenue receipts from it, and 1 to 3 of account 3. That is these three things. We reduce revenue receipts from total expenditure and 1 to 3 of account 3. That is disinvestment, sale of assets and recovery of past loan. Then we will be left with market borrowings by the government. If we reduce interest payments from the fiscal deficit, what it comes? Primary deficit. ये वो शो कर रहा है कि फिस्कल डेफिसिट में से हमारे टोटल एक्सपेंडिचर का जो पार्ट इंटरेस्ट पेमेंट्स में जा रहा है. So, if there is a low primary deficit, it is not a healthy sign. It shows most of the fiscal deficit is due to the interest payment on the loan taken in the past. Further, deficit financing is financing the excess expenditure over the revenue through the outside resources. This is financed by the government to reduce its deficit liability. It can be done by either printing currency by the RBI or borrowings is taken by the government through the market or through the RBI. So, to reduce fiscal deficit, revenue deficit, and to reduce the debt to GDP ratio, government has come up with FRBM Act that creates a liability on the government to cut on these. It is to maintain the balance between the revenue and the government expenditure. It helps in fiscal discipline and to achieve the macroeconomic stability and bring the coordination between the fiscal and monetary policy. So here are the latest targets of the fiscal deficit, revenue deficit and debt to GDP ratio in FRBM. For the fiscal deficit, government needs to achieve it till around 3% and debt to GDP of the central government is to be 20% and of the state it is to be around 20%. There is also a escape clause given that is around 0.5%. It has been used during COVID-19. It means इतना difference रख सकते हैं in fiscal deficit. It can be used during agriculture failure or in recession. If we chart out the summary of deficits, if we reduce revenue receipts from the expenditure, then revenue deficit will come up. If we further reduce grants for production of capital assets, then it will show effective revenue deficit. If we reduce total revenue from the total expenditure, it will show budget deficit. If we add up market borrowings into it, then fiscal deficit will come up. As we were not reducing market borrowings from the total expenditure that we have seen in the document. If we reduce interest payments from the fiscal deficits, then primary deficit will come up. We can write it further as budget deficit plus market borrowings by the government is equal to fiscal deficit. Hence, budget deficit is less than fiscal deficit. As we are reducing certain amount from the budget deficit, that is market borrowings, this is not a actually a asset. Rather, it is a liability created by the government through capital receipts. So fiscal deficit shows the borrowings of the government if there is a high fiscal deficit. It shows less money for the private. This is known as crowding out of private investment. High fiscal deficit means high interest payments need to be paid. This results in increasing the revenue deficit, as interest payments are included in the revenue expenditure. Fiscal deficit means high government borrowings. This reduces the credibility in the global market and increases the interest rate in the economy. As there is a less money supply that ultimately leads to crowding out. In this question, first statement says fiscal deficit is greater than budget deficit. Yes, as we have seen, if we add up market borrowings in budget deficit, then fiscal deficit will come up. So, hence, first statement is correct. Second statement says fiscal deficit is a borrowing from the RBI plus other liabilities of the government to meet its expenditure. Hence, this is a correct explanation of assertion. So, answer is A. Now, let's solve next question. Let's read this. Excess of total expenditure over total receipts. What it is? We have done. This is a budget deficit. So, for the B1, you will be left with two options, that is A and D. Then let's read second. Excess of revenue expenditure of the revenue receipts. What it is? Revenue deficit. So for the C, answer is 2. Although we have reached to the answer, let's read other statements as well. Excess of total expenditure over total receipts less borrowings. What it is? Fiscal deficit. So for the A is 3. Yes. Excess of total expenditure over total receipts less borrowings. This is fiscal deficit. And further reduced interest payments. What it is? Primary deficit. Here the question is about Indian public finance. First statement is external liabilities reported in union budget are based on the historical exchange rates. This is a liability. One thing you have to learn, like asset or liability are always taken on the current exchange rate to know the exact liability. So this statement is wrong. Although we have reached the answer, but we need to read other statements as well. Second statement, continued high borrowing kept the real interest rates high in the economy. We have done this. As if there is a higher borrowing, it means there is a less supply for the private investment. As there is a more demand but less supply of the loan, it will increase the interest rate. So second statement is correct. Upward trend in the ratio of the fiscal deficit of the GDP in recent years has an adverse effect on the private investment. We have seen this. This is known as crowding out of private investment. So third statement is also correct. Fourth statement is interest payments is the single largest component of the non-plan revenue expenditure of the union government. So when the budget of this year will come up, you need to see what is the maximum component of the union government expenditure. Currently, it is around 20% of the expenditure. So this is also correct. Which one of the following statement is correct? Fiscal responsibility and budget management concerns. It is linked to reduce both fiscal deficit and revenue deficit. Further, it also promotes fiscal consolidation. That means to reduce debt to GDP. Next question is, what measures can be taken to control the fiscal deficit? First statement, encouraging FDI. Was it even part of that deficit? No. Privatization of higher education institutions. Yes, this will reduce the government expenditure. We have reached the answer B, but we need to read other as well. Downsizing of bureaucracy. This will also reduce the government expenditure. Selling, offloading the shares of PSUs. What it is? This is disinvestment. Next, deficit financing is used for raising resources for economic development. What is deficit financing? To finance the deficit in the budget. Fiscal Responsibility and Budget Management Review Committee report has recommended debt to GDP ratio of 60% for the general combined government by 2023, 40% for the central government and 20% for the state government. Next statement says central government has domestic liabilities of 21% and 49% for the state government. Here if you see the first statement together, first statement is saying central government needs to reduce its debt to 40%, but second statement is saying central government has only 21% of the GDP. It means these are contradictory or opposite statement. These can't be correct together. So we need to eliminate D statement. If you apply further mind, then you can think that borrowing of the central government will be higher than the state government because it has to borrow for the whole of the India. So first statement can be right, second statement will not be right then. Then you can eliminate B statement as well. Then from the A and C, third statement can be done only with the knowledge. That is, as per the Constitution of India, it is mandatory for the states to take the central government's consent for the raising any loan if the former owes any outstanding liabilities to the latter. Yes, this is true. So answer is C. In this question, a country is said to be debt trap. What do you mean by debt trap? Like, person is not able to get out of that debt. If he takes the loan for 1 lakh, but he is not able to repay, then he takes further loan to repay him to increase its tenure. As the farmer takes loan from the NBFC, say for 2 years, but if after 2 years he is not able to repay, then he has to take further loan from the moneylender. Let's read first statement. It has to borrow to make interest payments on outstanding loans. This is correct. Which one of the following is responsible for the preparation and presentation of the union budget? This fact you have to learn. Answer is Department of Economic Affairs. Next question is, what it is considered as a part of fiscal stimulus? So, fiscal stimulus is something government is increasing its expenditure. It could be revenue expenditure or capital expenditure to give push to the economy. First is cutting the tax rates. Yes, as the government is reducing the revenue. Increasing the government spending. Yes, this is true. Abolishing the subsidies in the context of economic recession. No, this is incorrect. Rather, it is the opposite of fiscal stimulus. So we need to exclude third, and the answer is A. You can see in 2010, they asked about the fiscal stimulus. And in just next year, they asked about the term of fiscal stimulus. Let's read statements. It is a massive investment by the government in the manufacturing sector to ensure the supply of goods to meet the demand surge caused by rapid economic growth. No, this is not directly linked to any manufacturing sector. It is an intense, affirmative action of the government to boost economic activity in the country. Yes, this is true. Let's read third statement. It's a government intensive action on the financial institutions to ensure the disbursement of loans to agriculture and allied sectors to promote the greater food production and food. This is the statement that is just to confuse you. Fourth statement, it is the extreme. Here I want to show the word extreme is itself a three word that can be eliminated. Affirmative action by the government to pursue its policy of financial inclusion. No, this is not directly linked to the financial inclusion. This question we will do with the balance of payment. So next question is, with reference to the union budget, which of the following is covered under non-planned expenditure? Now this distinction is not made between the planned expenditure and non-planned expenditure. Earlier it was there, and these all four were part of non-planned expenditure. Along with the budget, the finance minister also places other documents before the parliament, which include macroeconomic framework statement. This is under the provisions of FRBM Act. This question was asked in 2020. So this shows FRBM Act is important to be done. Next question. There has been a persistent budget deficit year after year. Which of the following actions can be taken by the government to reduce the deficit? To reduce the deficit, government needs to increase its receipts, reduce its expenditure. Reducing revenue expenditure. Yes, this is true. Next, introducing new welfare schemes. Will it reduce expenditure? No. This will increase its expenditure. So, this needs to be eliminated. We are left with A and C. Third, rationalizing subsidies. Yes, this will reduce the expenditure. So, answer is A. Let's read fourth. Expanding industries. Here, also, government has to spend, so it will increase the deficit. Here also you can see in 2050 the question was asked on the persistent budget deficit and the actions to be identified to reduce the deficit. Similar question has been asked in the 2016 as well. Reducing revenue expenditure? Yes. Introducing new welfare schemes? No. It will increase the government expenditure. Rationalizing subsidy? Yes. You need to eliminate 2. You will be left with C. Reducing import duty? No. And it will reduce the revenue. Receipts. But to reduce the deficit, we have to increase it. Question says, which of the following are included in the capital budget of the Government of India? Here you can classify capital receipt and capital expenditure. First statement says, expenditure on the acquisition of assets like road, building, machinery. It is creating a capital asset and it will not be done every year. This is a non-recurring in nature, so it is a capital expenditure. So it is a part of capital budget? Yes. Loan received from the foreign government. This is capital receipt. पैसा आएगा. And this is non-recurring in nature. ये हर साल नहीं आएगा. So let's see third statement. Loan advances granted to the state and union territories. This is capital expenditure. This is also non-recurring in nature. So answer is D. Despite being the high saving economy, capital formation may not result in the increase in output. This is saying there is a high saving rate that is converting into capital formation. What it means? Investment is increasing with the savings, but it is not resulting in the output. It means there is a low capital output ratio. No, there is a high capital output ratio. High capital investment, but there is a low output. Here the answer can be derived from the question statement itself. Which of the following is not included in the asset of the commercial bank? Let's read. Advances. These are the loan given by the commercial bank. It means future में पैसा आएगा. So it's an asset. Deposits. Deposit is made by the customers of the bank. It means future में पैसा देना पड़ेगा. It means this is liability. Next is investments. इस पर इंटरेस्ट आएगा. फ्यूचर में कैपिटल गेन भी होगा, as investment can be sold at profit. So this is asset. Next, money at the call and short notice. Here also bank will earn interest. Hence the answer is B. As question is asking which is not an asset, deposits are liabilities. So with just understanding of asset is something जो future में फायदा देगा और या फिर पैसा आएगा, liability is something future में कोई obligation create हो जाएगी, हमारा outflow होगा in future में, तो this is a liability. Here, under the Kisan Credit Card Scheme, short-term credit support. With short-term, what you can equate it with revenue credit. That means for the short term. First, working capital for the maintenance of farm assets. Let's assume you're not aware of the working capital. Let's read second statement. Purchase of combined harvesters, tractors and mini trucks. Can it be for the short term? No. For this, there is a need of long-term loan. At least for more than 1 year. So, we need to eliminate second. You will directly reach the answer, but we will read further. Consumption of requirement of the farm households. Yes, this can be a short term. Post-harvest expenses. Yes, short term. Construction of family house. No. For this, long-term loan is required. If you would have eliminated fifth statement, then you can also reach the answer. Now let's discuss what is working capital. Capital required for any business are classified into working capital and fixed capital. Working capital, it's about day-to-day capital requirement. For example, to purchase goods, to give credit to your customers. Fixed capital, it's for long term. Example, purchasing fixed assets like land or building. From the balance sheet of the company, it is possible too. But we can assess size and composition of the asset and liability. Balance sheet of any company shows liability and assets of the company. First statement is judge the extent of profitability of the company. It is derived from profit and loss account. Under which of the following circumstances capital gains may arise? Here you can see capital gain can be arise from the capital assets. That is for the long term. Let's read first statement. When there is an increase in the sale of the product. This is short-term asset. As the stock of the company is maintained to sell within a month or maybe in a day also. So let's eliminate first statement. We are left with C and D. When there is a natural increase in the value of the property owned. Yes, property owned, this is a long-term asset. So this is a capital gain. When you purchase a painting, there is a growth in its value due to increase in its popularity. Yes, this is also a capital asset. Each one of the following can be considered as public investment in agriculture. Here also you need to think public investment will also be a long-term investment that will benefit a citizen or any farmer for the long term. Let's read first statement. Fixing MSP for the agricultural produce of all crops. No, this is not for the long term, rather it will benefit the farmer in that year itself. So let's eliminate first, you will directly reach to the answer, but let's read other. Computerization of primary agricultural credit societies. Yes, this will benefit in long term. Social capital development. Yes. Free electricity supply of farmers. No. This will benefit in that year only. You can admit fourth. Then you will be left with A and C. Waiver of agricultural loans by the banking system. No, this will not benefit in the long run. Rather, it will benefit in that year by waiving of the loan. Setting up of cold storage facilities of the government. Yes, this will also benefit in long run. So the answer is C. This is the end of video. If you have any doubt, you can ask me on email and Telegram. Further, if you want me to make video on any specific topic, please mention in comment section. Please like, share and subscribe. Thank you.